Happy long weekend. We're going into this long weekend with what I would describe as simply a very strange market. We had earlier in the week the market reacting to bad news as bad news. Today we got some bad news on unemployment claims, and the market initially pulled back and then seemed to rally out of nowhere as Bullard was speaking, in my opinion, in a very hawkish tone, despite the data we've had, the bad news data we've had so far this week, and despite the cooler than expected PCE. When we put the data in context with the market reaction, with the Fed, with the market reaction, the market with regards to yields, and today assuming a rally, good news, bad news, bad news is good news type action, it's assuming that the Fed is going to take its foot off the gas. We're definitely seeing that in the yield market. We're definitely seeing that in the Fed funds market. We've been seeing that in the stock market throughout, except earlier this week for just a few days. However, the Fed outlook is a very binary thing. They're going to hike rates or they're not going to hike rates, or they're going to cut rates. It's very slotted outcomes. And when we add the context of what the Fed is actually saying and what their dot plot actually suggests, it couldn't be more clear that they are fully convinced in their dot plot. They don't joke about this. This is not some sort of joke that they're just putting this thing out and it doesn't mean anything, right? They have a meeting. They have the focus of the entire world. This is the most powerful body arguably in the world. This is not a joke. This is like the real deal. The market is being crazy here. And before we even got this week's data, last Friday, after cooler than expected core PCE, Susan Collins, member of the Fed, addressed the idea of weaker jobs data directly and said, even if March jobs data is weaker, we're still going to hike. The Fed's outlook remains in place. The outlook is for no rate cuts this year and at least an additional hike, at least one additional hike. Remember, they just had this FOMC meeting. She's acknowledging that weaker data might come. The Fed expects weaker data for the rest of the year. That should be the expectation, that we're going to get weaker data throughout the rest of the year, that inflation is going to come down throughout the year, that unemployment is going to go up a healthy 1%. That's a big move. We have not even really begun to see that yet. So weaker data is coming, and people are assuming that weaker data equals softer Fed. No, the Fed is forecasting what it's doing, assuming weaker data. It's a complete shit show, in my opinion. I hate to use that language. Hopefully I won't get banned on YouTube, but that's what it is. And there's a reckoning coming, as far as I'm aware. I mean, this is actually a good thing, really, because we don't want the banking crisis. This is giving banks that are in stressed positions an opportunity to sell off some of their stressed assets and get into a more healthy position, this fall in yields. But it's simply not sustainable, given what the Fed's going to do. I mean, there's not a single rate on the curve that is above 5%. None of the math works. If the Fed's dot plot is even remotely close to being accurate, the whole yield curve is just completely off sides. So, yeah, it's an interesting environment. I'm not going to look too much into one day's action. Yes, I am taking some losses today, but I'm not freaking out about it because I simply just trust the fundamentals. I'm not really looking at the portfolio second to second and freaking out about, am I making the right decision or not? If I have to take some short-term losses, that's just the way it is. I'm definitely trying to get longer-term exposure here. And I just trust the fundamentals. I think ultimately the fundamentals will prevail, and the Fed is simply talking that way. The market is choosing to fight the Fed. There's nothing we can do about that. There simply isn't anything you can do about that. That's just what's happening. But they're seeing the data. They are continuing to be hawkish. They're expecting weaker data. There's no reason for the market to do what it's doing. We're getting some jobs data tomorrow. I have no idea how that's going to come out. We're getting some CPI data next week. I have no idea how that's going to come out. What I know is the Fed is doing what it's doing, and it's expecting inflation to come down to over 3%, a little over 3%, under 4% by the end of this year. That's the expectation. So they're granting us everything the market is looking for in order to rally, but the market is trying to over extrapolate. It should be that we get the weaker data and the market should just be chill about that. It should just be flat essentially. And then if we get hot data, then it's a surprise. Then the Fed has to go more hawkish. Not, if we get cooler data, the market rallies. The Fed is expecting cooler data. They are expecting unemployment to go up. They are expecting inflation to come down. These are the expectations that are built into the dot plot. They don't see the financial stress anymore. Not an '08 recession. We're not seeing a wave of banks going under. There might be some more. They already said that it's probably not over. Biden said it's probably not over. Jamie Dimon said it's probably not over. Bullard says 85% that it's not going to be anything crazy, that it could come down. They've got the facilities to essentially make sure that nothing crazy goes on. They actually have the facilities that could have made it so SVB didn't go under, but SVB just couldn't react in time. Everyone pulled everything out in a day, basically. So, every other bank is going to be fine. We saw what happened with the discount window. That's not something that continued. That's something that reversed last week. So I'm simply looking at the fundamentals. What the stock market does in one day is anybody's guess. And I've shared my view and analysis of the fundamentals with you to make your own decisions with it. So that's today's video. And until next time, peace out.